Blog Talk Radio.
Are you ready to take a bite out of the competition? Are you looking for ideas to make your business better? Welcome to the Core Business Show with Tim Jacquet, sponsored by Apple Capital Group. At the core of every successful business, you'll find people making a difference. And with each episode of the Core Business Show, we talk with those people, examine those ideas, and explore the strategies that make them special. Now, the host of the Core Business Show, Tim Jacquet.
Welcome to another episode of the Core Business Show. I'm Tim Jacquet, your host. Today we're going to talk about the Bush tax cut reversal. Topic is economic suicide. If you're joining the conversation, feel free to go ahead and join us in the chat room, or you can email us at info, the Core Business Show, or Twitter at Apple Capital for the Twitter handle. Stuart, welcome to the show again.
Thank you, Tim. Good to be here.
But kind of tell us a scenario. Why is it economic suicide? And tell from the very beginning, when President Bush enacted these cuts, why is it expiring? How is it affecting us?
Well, the president is harping on the fact that he wants to raise income taxes and raise the tax rate for the super rich and the very wealthy. But ending the Bush tax cuts, which are set to expire at the end of this year, is going to mean higher taxes for everyone in every tax bracket. That's everyone, Tim.
Mm-hmm.
I mean, they're eliminating the 10% bracket, and that's going to go up to 15%. The 25% bracket is going to go, I believe, to 28%. Everything is, well, the crazy thing is a married couple now are going to be penalized. If you're filing a joint return, you're going to pay more than if you filed single. People filing single, which makes no sense whatsoever. And then, going into businesses and people that have investments, the capital gains tax is coming back with a vengeance. And you need capital gains. You need to invest. And when people invest in their businesses, capital gain is nothing more than a double tax. And that's really going to stifle our recovery. That's what I feel.
So when President Bush actually enabled these cuts 12 years ago, what were the cuts?
Well, it cut everything across the board, and I think it should have cut more. One of the most serious cuts that is going to go away is the death tax, which is probably about as horrible a tax out there. But right now, if someone were to die with a $5 million estate, they're not going to pay any tax or not very much tax. But if you die after the first of the year, you're going to pay about $2 million in tax, 50%. The first $1 million would be exempt, and you'd be paying 50% tax on the next $4 million.
Wow.
So it's a lot of money. And then added to that, there was Obamacare. There's the 3.9 or say 4% sales tax, for lack of a better word, that's going to come. It's going to be in every investment that you sell for a profit.
Okay.
A lot of taxes. And right now we're in a very fragile state in this. I personally think we need to keep these tax cuts in place. We need to cuts and revamp them, but not to make them worse. And I think we need a change of administration badly.
Wow. And of course, that if this doesn't happen, then these taxes are being enacted, and either unless someone comes up with something before the year, which regardless, nothing is going to happen. It's not going to change until January. So they're still in effect, and they can always go back and rescind them?
Yes, I mean, they're going to happen anyway, no matter what happens with the election.
Okay.
But the new president, or if Romney is elected, wouldn't take office, I think, until the 28th of January. But then tax cuts can be reenacted retroactively. But January 1st, everything is going to become very terrible. And I don't think that's anything that the economy needs right now.
Well, for example, if President Romney makes it to the office, he couldn't do anything until he gets in, and then he still had to deal with both branches to come up with some type of tax solution. Is there any way that there's indication, hey, this is what we have on the horizon, or just not really saying anything, and they just deal with the devil if they give it?
I think if Romney's elected, it will have to be handled after the fact, but it would be made retroactive. So that wouldn't change anything. But coming January 1st, everything changed. And it's that. I mean, people think that these cuts the eliminating these cuts are going to help tax the super rich, but it's going to make a horrible difference just for the average married couple. It's going to reduce the deduction. The standard deduction is going to reduce to about 167%, which is considerably less than what it is.
Do you think there are any, in your opinion, any solutions or anything on the horizon that people are recommending as an alternative?
Well, I think right now it's more important now to be safe if you have any kind of an estate to, again, go back, if you haven't done it already, to get your estate in order, get a family trust, a living trust, and do things to protect your assets and to protect your estate so that it ends up taking breathing from your heirs.
Wow.
We need to obviously do something about the real estate housing. And you hear a lot of hype, but I don't think, Tim, that we're anywhere in a true recovery. The numbers that you see where prices in housing has increased, I think you're seeing investors like Warren Buffett bringing up bargains at cash prices. It's not a person buying their home to live in. It's still a very difficult thing, and it's really tied to jobs. Until the jobs are fixed and people are able to qualify and get a mortgage, it's really not going to get better in that area.
Okay.
A lot of fixing that needs to be done. Dodd-Frank needs to be revamped. It's really hurt a lot of people.
So what are your advice if you, for example, if you have an estate, your parents are elderly, they're not necessarily give up control, but what could the heirs can do to really protect the estate? Should they go to an attorney and say they need to do a trust and ask for all of those?
Trust.
Okay.
The living trust is very important. If the Bush tax cuts in place, it wasn't as important because $5 million, if you're up to that level, would have been exempt. But now if you have a $3, $4, $5 million estate, to be safe, I would go to an attorney and get a living trust if you haven't done it already.
And tell us, what is a living trust?
It puts your money, you still have control over it. It's a revocable family trust, but you can designate where the property will go tax-free to your heirs.
Okay. So that trust would be... Go ahead.
It's not terribly expensive to do either. It's not a cook better for these lawyers, so I don't think it would cost more than $500-$600 would be my guess.
Oh, wow. That's really reasonable. So what they would do is kind of tell us what the scenario. They will retitle all the accounts, bank accounts and homes and all the assets and put all the assets under this living trust.
Yes, and the person would become then the trustee who has sole discretion on moving the property in or out of the trust. But the property then goes into the living trust, and then the trust would be passed on to who is designated by the trustee, which would be there would be new beneficiaries.
So they just assume it will always remain in the trust.
Oh, yes, you don't lose control of your property. You're not losing anything, but you're really finding a way to get around paying these horrific estate tax, because if it isn't repealed, it's going to go from $5 million down to $1 million. And then anything over $1 million will be taxed at 50%.
Okay.
So if you worked your whole life and have built up some investments and some money, most of it's going to go to the government.
Wow. So with that particular trust, it would never come out of trust in order to, if it comes out of trust, then it is subject to estate taxes.
Yes, and sometimes you'll even want to move it in or out of the trust. I was in the mortgage business, and when property was in a trust, we could certainly put a loan on it, but the Fannie Mae, Freddie Mac underwriters could figure out how to do it. So we take it out of the trust, we do the new loan, then put it back into the trust. So maybe there'd be exposure. You don't want to die for a couple days, but you can't move it around.
Okay, so it's a little flexible. So the other scenario is you talk about investment tax will go up from 15% to 20%?
And it can go up to 39%. I mean, it can get up there pretty high.
Okay.
So the capital gain tax is really bad. You need businesses, it is small businesses that create jobs, and you need them to invest. And when you're investing your money, you've already paid tax on that money you're investing. And then you're going to pay tax again. And you need to invest. You need to speculate. That's what keeps our economy going. It's terrible tax.
And that's the capital gain?
Yes, I don't know what's worse, the death tax or the capital gain tax.
Wow. So the capital gain can be anything that you actually gain money on. Investments, real estate, if you sell the house, you make profits on that capital gain as well.
Well, yes, on your own personal residence, there are exceptions if you live there for a couple of years. If you're a single person, there's a $250,000 exemption, $500,000 for a married couple. So that's not going to change. But if it's an investment property, you're going to pay tax on that, and it's going to go up way high. And then added to that, there's going to be another 4%, 3.9, just say 4% sales tax, for lack of a better word, for Obamacare tax.
Wow. So if you go to the opposite solution, for example, you lose money on the property that you're trying to sell, lose money on the stock you try to sell, how does that affect you then?
Well, if you lose money on investments, that's a capital loss. You can use that to offset a capital gain, and you can use only $3,000 a year of that to offset personal income as ordinary incomes. So it doesn't really have much effect there. The idea of investing is not to lose. I mean, the idea is to make some money, and then when you make some money, you want to be able to keep it.
Well, I guess it's got losses, and I'm sure that's going to be on somebody's radar this year. Hey, let's cut this because then it's going to cost me on this end, and kind of hedge our bets. If you have like an LLC or something like that, and you buy and sell, you flip homes on a regular basis, you have people, like I was in college, we were day traders. So when that particular scenario, how can they protect themselves in one sense?
Well, if you're flipping homes, you're not having long-term investment, which is a capital. That's part of your ordinary income.
Wow, okay.
So if I buy a house at $1,000 and I sell it 2 months later for $300,000, then I've made $200,000 in ordinary income, that's your business. You're in the business of buying and selling.
Okay.
Stock. It's not a long-term gain.
Wow. Anything that you would like to leave us with when it comes to people need to actually prepare themselves one way or the other? If it goes this way, hey, this is what I need to do. If it goes this way, this is what I need to do. If I'm going to hedge my bets and go with one scenario or another, what should I do?
Well, sure. I mean, there's two types of people. If you don't have any income, and if you're collecting welfare and food stamps and don't want to get a job, then vote for Obama. But if you have assets and you want to make a little money and keep your money today, I think it's very important to see either a good accountant or a tax lawyer and the whole scenario, and be sure that you protect your assets so that it's not going to all go to the government. It's an important step to make. If you haven't done it, I urge everyone to do that now.
Okay. And the last question regarding the small business owner, what can he do? Of course, you can go to what he's going to be faced with in one sense. Of course, some of them can't afford attorneys, and they ask specific questions to make sure.
You can do a trust, and you can do these online. There's the one that I forget, the OJ's lawyer. It's on TV all the time. But he has a pretty good site where you can do it yourself and you can follow the forms. But if you do, at least before you transfer everything, have somebody who knows a little bit take a look at it. But it's not too hard to do.
Perfect. Well, Ken, if they want to reach out to you, I know you have your own website.
Yes, they can contact me. My main website is realtycrisis.com, or they can call me at 877-94-HELP-ME.
Okay. Do you think it will be recovering in the housing?
You mean in the housing market?
Yes, in the housing market.
I think it's going to happen, but I think it's going to take a long time. We really need, there's so many people out there that want to get mortgages, and today actually have the income, but they can't qualify. The banks are scared with the regulation put into effect by Dodd-Frank, which those need to be relaxed. They can go out and they can apply, they're going to get it. And we need to see them not go back to reckless lending, but a little more common sense underwriting. And there are millions of people that will get out there and buy homes that really want to and that can't qualify. They have the income and they have jobs and they have their personal credit, their consumer credit in order, and they should be given a second chance.
Well, perfect. Sir Vineyard, thank you for joining the show. Really appreciate it.
Thank you, Tim. Have a great day.
Same here. Take care.
You too.
Bye.
Thank you for listening to the Core Business Show with Tim Jacquet. For more information about equipment financing and asset-based loans, Visit our website, applecapitalgroup.com. That's applecapitalgroup.com. Or call us at 866-611-7457. We hope you'll join us for our next episode. And remember, you can always get to the core via iTunes. You'll find all our previous episodes there. And thanks again for listening to the Core Business Show with Tim Jacquet.